Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to my channel. And in today's video, I'm going to be going through the best oil stocks to buy now in 2022. Let's get straight into it. So the first company on my list today is Equinor. So Equinor is the Norwegian state-owned multinational energy company headquartered in Stavanger. It's primarily petroleum, but they also do sell gas as well. They operate in 36 countries worldwide, and they have a lot of investments in renewable energy as well. So yeah, in terms of the structure of the company, I think it's important to say that the government of Norway do own 67% of the shares, but the rest of the stock is on it's on the stock market, so you can go ahead and buy it. So yeah, what do I find interesting about Equinor? So, well, let's have a look at the DCF valuation and look at its free cash flow using analyst estimates and a required rate of return of 10%. We're coming out with a share price of $29 per share, and the current share price as of this video is $32 per share. So yeah, it's looking pretty decent. For a 10% return, you're looking about there. One thing I would say is, like all of these picks, if the oil price collapses or lowers, then it's likely that the share price will follow as well. So what you want to do is you want to buy these shares when the oil price is low. If you think oil's going to stay high for a long time, then yeah, go ahead, it might be a good pick. But the lower the oil price, likely the lower these will be. One thing Equinor does have compared to a lot different to other oil stocks is their cost per barrel is a lot cheaper than the general Joe oil company. So they can produce oil at about $30 per barrel compared to, say, Exxon, Shell, BP at about $50-$60 per barrel. So they've got a large margin of safety if the oil price does collapse or go lower, but they can still make good profits. So that's one reason I personally own Equinor as well. I think that's a fantastic attribute to have when even with all these renewable and green policies coming in, oil is here to stay in my opinion. Hydrocarbons are in absolutely everything you can think of. So yeah, Equinor is an interesting one. So company 2 on my list today is Shell plc. So Shell plc is a British publicly traded multinational oil and gas company headquartered in London, and it is one of the oil super majors, so it's one of the biggest oil and gas companies in the world. Yeah, they have operations worldwide across all sorts of different countries. Yeah, the company itself used to be known as Royal Dutch Shell, but recently it, changed its name, shortened it a bit. The company itself is listed on the London Stock Exchange, and it has listings in Amsterdam and New York as well. So yeah, anyway, on to the numbers. So using a 10% return and using free cash flow estimates from marketscreener.com, we're coming out with a share price of around £29 per share, and the current share price at time of recording is about £19 per share. So yeah, if you believe these free cash flow figures and you believe they're going to stay steady, it's looking like Shell could be a decent pick for your portfolio if you think the oil price is going to stay high and they can maintain these profits and cash flow. Yeah, I think out of a lot of them, Shell is a fairly decent one. I prefer the British oil companies compared to the American ones personally. That's just my preference. I mean, maybe being UK based as well. And in terms of when you get your dividends, you get US dividend tax. Let's say the oil companies do pay fairly high dividends, but you have your withholding tax, which can be a big deal over time if you're holding these for a long time. So yeah, what's good about Shell and BP is if you want them in an ISA, you get your dividends paid, but yeah, you don't have any withholding tax. So I think that's something important to think about if you're looking at oil companies. It's something you wouldn't usually think about because you'd maybe think, all right, okay, Exxon, Chevron have a nice dividend, but if you're not getting that full dividend over time, that's going to matter. So yeah, Shell's an interesting one, and it looks like it's got a bit of upside as well. So company 3 on my list today is BP. So BP plc, formerly known as a British Petroleum Company plc, is a British multinational oil and gas company headquartered in London. So a bit similar to Shell. They are worldwide, one of the oil and gas super majors once again. Yeah, they deal in all sorts of different oil and gas products. And yeah, so let's have a look at the numbers. Free cash flow estimates from marketscreener.com once again. Free cash flow estimates required rate of return of 10%. We're coming out a share price of £6.50 per share. And what's the share price? Current share price is £3.50 per share. So I left this one till last because this one looks like the most undervalued based on the numbers. So yeah, if you think Shell can maintain these free cash flow figures going into the future, yeah, the share price should be worth £6.50. So yeah, it's looking very, very interesting for BP. One thing I will note, due to recent events in Russia and Ukraine, BP have announced that they are going to be disposing their 19.75% stake in Rosneft. And yeah, so what this means is quite a lot. I think it's about 20% of BP's profits are just going to go overnight. So these figures, I don't think they have accounted for them. So you could maybe, this share price, you want to times it by 0.8, so 80%. Hence, basically what we're thinking is, if BP's profit is going to decrease by 20%, then going forward their profits and cash flows are only going to be 80% of what they would have been. So maybe you want a bit more of a margin of safety on this one in terms of your share price. Maybe these numbers need to be done again to account for the Rosneft disposal. Because it is a big deal, it means the business is going to be a lot smaller and a lot less profit making over time. So something to bear in mind if you're looking at BP stock. Now let's have a look at the genuine impact rankings for all of these oil companies, and we're going to compare them against all of each other using the genuine impact ranking system. So yeah, we will start with the quality metric. So out of all of them, it's looking like Equinor is the highest quality. So the best balance sheet, the best income statement, the best cash flow statement. And yeah, to me this makes sense because when I've done analysis on Equinor before, it's got less debt, it's more profitable. Yeah, overall it just looks like a better quality business, which is why I was interested and therefore invested in them. But looking at the value side of things, it's looking like BP is a clear winner. Yeah, to be fair, you could see this from DCF analysis as well. BP looks the most undervalued from the numbers side of things, then Shell, then Equinor. So if you're looking for a bargain, BP might be the one for you. It's also not the highest quality one, so if you're more of a deep value investor and you're looking for cheap stocks, BP might be a better option if that's your strategy. Personally, I prefer high quality businesses at a fair price, so I think Equinor, I'm very happy with that one. On the momentum side, I don't really look at this section, but it's looking like Shell is the number one, but all of them have got shields around them, so there's a lot of action going on with our stocks from a trading and value investing point of view. A lot of them are looking cheap and a lot of them are going up and down constantly because of the oil price coming down and the current crisis in Russia and Ukraine. So there we have it. They were the best oil stocks to buy now in 2022. So let's go over them again. So it was Equinor, Shell and BP. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.